let me take it across to Naresh and find out what the charts are reading right now. We also will have Kunal Bothra join in just a second. And of course, Deepak Shenoy also here with us. But Naresh, afternoon, what's it looking like? A sudden turn, and I guess it's the global markets weighing heavy on us.
Yeah, so we've seen a quick decline in US futures, and that is affecting. And we've seen a decent enough recovery, which happened in Nifty 50. We went all the way closer to 22,650, 22,700 mark. The 22,800 mark would be tough to cross. And now we continue to find a new range. So hopefully the range could be between 22,300 to 22,700 going forward. So a little bit of a dip and consolidation. So time for some bit of a dip in a lot of names across the board. And we are seeing some fresh breakdowns in the derivative stocks.
Well, definitely seeing some bit of a breakdown in some of those stocks. So let's watch out for that. But Deepak, hi, good afternoon. Good to be speaking with you. What do you make of the markets right now? Because the week gone by has been really good, but then comes Monday. Indeed, a volatile trading session. But given this weakness that we are seeing right now, Deepak, what's your sense? Is this volatility here to stay? And what's the long-term trend that you are focusing on?
So there is actually, I think, a weakening trend in general. The rupee has weakened as well today, 20 odd paisa. I think there's also been a reversal in the market, but I feel this is mostly related to the uncertainty at a global standpoint, because nothing meaningful in India has changed so far. One of the biggest threats right now is tariffs, and what we will do to perhaps address them. Do we give up a lot of the things that hold our economy in terms of tariffs, incoming tariffs, or do we say that, okay, let's just completely negate incoming tariffs completely that we have already, or some third party approach? Given that the US tariffs on Canada, at least, I think, have been applicable, and to a certain extent on China as well, that will impact the US economy a little bit further down the line. From Wednesday onwards is when their steel and aluminum tariffs come into play. From April 2nd is when I think universally they'll have these reciprocal tariffs in place. Given this next 1 month, I think, is going to be volatile regardless of what happens. But I find that, in markets, price uncertainty badly. That means they just go down regardless of what the fundamentals might turn up. But when there is some layer of certainty, then the stability arises. So we should kind of, look at this rest of this month and maybe the first few days of April as going to be tumultuous in the markets regardless. This will give us opportunities to buy something. It will give us opportunities to rebalance portfolios. But we should assume that stability will only come when uncertainty has gone away. So I would say, think of this volatility as going to remain at least for the next 1 month or so.
All right, so that's the current take. Keep looking out for opportunities. But yes, indeed, the biggest talking point is the tariff. And we spoke with Professor Madhav Das Nalapat, who is the Director of Geopolitics and International Relations at Manipal University in India. Let's go across and listen into his take.
I'm sure the Commerce Minister is working hard to address it. Certainly, the Prime Minister is worried about it and is working hard to address it. Well, the fact is, the US presents an opportunity as well. An opportunity for Indian small-scale sector, medium sector, and by the way, the Chinese have scored heavily in developing their own SMEs and medium, the small and medium sector. We need to do the same. We need to encourage them. And for that, we need good market research. We need tax and regulatory policies that align with the needs of industry to be competitive in pricing. And I'm very certain we can take advantage of it within Modi 3.0. So I'm not worried. This is an opportunity. I see it as that.
Okay, and opportunity, not a threat. That's the word coming in from Professor at Manipal University. But Kunal, what about the markets? Seems like what we had last week was just sort of flattering to fool us now, because once again you're seeing acute pressure on the US futures, and that's taking us down too.
I think most of the surrounding data points is still negative, positive for India. I mean, like the dollar index is still below 104. The crude is still at 70 odd mark. You have gold prices still at $2,900 per ounce. And I think when we look at this kind of a setup, I would probably indicate that we are just consolidating. Now, what's happened today for our markets is there were two gaps on the Nifty charts which were created in the last 1 to 2 weeks. When the sell-off was getting a lot more aggravated. The second gap, for the index was around the 22,700 to 800, 820 band for the Nifty. Now today, after the intraday move, when we went closer to the 22,700 mark, we've just about filled the second gap partially. Now we've seen this price action, reaction earlier also, that when the indices head into the closure of a gap or there's a partial closure of the gap, we tend to see some bit of intense pressure on those days. But then once the market settles over the next couple of days, that's where I believe that second round of opportunities do arise. So my belief is that over the next 2 days, you might probably expect that some bit of more pressure could be seen on the indices. But 22,200, if the index happens to come back to that kind of a territory, that could be a very good contra-buying zone.
Okay, that's the take coming in on the index right now. In the last 3 months alone, we've fallen almost about 9% or so. Is Deepak back with us? Okay, Deepak is back with us. Deepak, a 9% fall on an index level alone in the last 3 months. Would you say go all in right now, deploy all the money because everyone did have that stock list ready with them? Or would you say wait it out, it's fine to miss out on, the bottom 5% if at all?
I think I'm the second part of your equation, Aisha. I think you'll always miss the last 10% because we tend to sell after markets have peaked and then start to fall. So I say, listen, the last 10% is not mine. It is the markets. And the first 10% is also not mine. It is still the markets. You got to wait till you start seeing the positive sign from the markets, both in terms of prices and in terms of fundamentals haven't weakened significantly yet. The fear is that they will, but I don't think they have weakened significantly yet. So I think going forward, I'm going to look at cues where markets start to give us either opportunities on a sectoral basis or that the old favorites which have been beaten down come back up. In a lot of ways, I think we will probably see the tempering down of the FPI sales, corresponding to perhaps a point where the markets kind of find a bottom. But we'll probably want to pick it up only after we know what the next set of sectors is that moves. It could be because of the tariff changes. It could be because of government responses. The government may ease a lot of regulations related to business, whether it is extreme labor laws or whether it is the number of OKs you need to set up a business in India. All of these things will benefit different industries differently. And when they do come, or if they come, I think we will want to take a bet on those players when they come in. So I don't think you should be in a hurry right now. There's not the time to sell your house and buy stocks, which is what a fire sale would be. I don't think it's a fire sale yet. It's nice. The valuations have come to better points, but it's not by no means a place where you say, forget everything, sell and sell whatever else you have and start buying into the markets. No, it's not that yet. I think you have to be very selective and very opportunity led rather than saying buy the whole market.
Be selective, and it's not the fire sale yet. That's the word coming in from Deepak. But also, there's a news flash coming in on IDBI, where from agencies we are getting up that IDBI stake sale pack to be finalized this month, and India expects to complete the stake sale in the first half of FY26. It's been in works for a long time now. Let's see what happens next. But with this, viewers, it's now time to slip into a very short break. But before we do that, the Leaders of Tomorrow Season 12 Awards kicks off tonight at 5 p.m. in New Delhi, bringing together some of the brightest minds in business. Now, under the theme, Powering Entrepreneurs Hip for the Global Stage, the night will feature thought-provoking insights from industry leaders and, of course, recognizing the most promising MSMEs across 14 different categories. Gracing the event is Shri Anurag Singh Thakur, former Union Minister, Chairman, Parliamentary Standing Committee on Coals, Mine and Steel. And joining the stellar lineup of speakers are Mr. Chinmay Doble, IDFC First Bank, Mr. Aman Gupta, co-founder and CMO of Boat Lifestyle, and Mr. Ashish Kumar Chauhan, MD and CEO of NSE, Dr. A. Velumani, creator Thyrocare, among others. Now, on the global front, Mr. Akis Evangelidis, who's the co-founder of Nothing, will share his expertise on building brands with global appeal. It's going to be a celebration of innovation and inspiration. Tune in at 5 p.m. on ET Now's YouTube channel. Closing trades right here on ET Now. Yes, a shade of red on Nifty as well as Bank Nifty. We are definitely off the day's highest point, and Nifty Bank is now having cuts of over 320 points right now, and the breadth of the market is definitely not looking that great. But amongst the losers in trade right now, it's ONGC that is seen to be taking the top spot. Other than that, Trent, Bajaj Auto and L&T are some of the draggers in trade right now, and well, of course, IndusInd Bank too, with a cut of around 4%. Holding on in trade. But amidst this, one such stock that is in focus is AGS Transact, because that stock is in free fall as the collapse of the ATM service is causing significant disruption in India's banking infrastructure. Major banks including SBI, ICICI Bank and Axis Bank are facing challenges in servicing about 38,000 ATMs. Let's go across to Sharad, who is joining us with more details on this one. Take it away, Sharad.
Well, AGS Transact is in focus, and this month itself the stock is down 62%, and from its 2024 high levels the stock has corrected almost 90-odd%. Now, what has happened recently, the company and its arm has defaulted in payment of obligations, and this delay has happened when it comes to servicing statutory dues. Now, the total default amount that stands at roughly 21-odd crore rupees, and the lenders include Bandhan Bank, IndusInd Bank and HDFC Bank as well. But there are certain other reasons also which are impacting the stock in a negative way. These include the threat of insolvency proceedings coming from Maxwell Aircon India, which is one of its creditors. Also importantly, credit rating downgrades to default has come when it comes to CRISIL and India Ratings, which came on March 3rd to 4th. Resignation of all 4 independent directors also raising a lot of red flags. And interestingly, the ATM operations, that has also getting impacted for the banks, and that is the second order effect happening because of these issues. Now, the total dues itself is around 726 crore rupees, with the exposure coming in SBI and Axis Bank as well. But there is a greater problem also that needs to be addressed, because the company itself is an ATM services provider to the banking system, and as per reports by Economic Times, this is causing widespread disruptions affecting major banks such as SBI, ICICI Bank and Axis Bank. Almost 38,000 ATMs are being impacted. SBI is the most impacted with almost 14,000 unserviceable ATMs. Now, what's happening is ICICI Bank and Axis Bank are actually migrating their ATMs to other service providers to mitigate the issues as well. So, of course, there is a shareholders loss happening, but also a lot of folks lining up in ATM queues are not able to process their transactions as well. So, there is a double problem happening, and also this has been a significant wealth destroyer when it comes to the overall markets.
Right, okay, we leave it at that, Sharad. That's AGS Transact and what we are finding out on this one. The one which is really bled today has been IndusInd Bank. Now, of course, news that RBI has granted a one-year extension to the MD and CEO Sumant Katpalia has not gone down well with the market. Not his extension, but there's speculation that post his tenure extension, that of 1 year, there is going to be an outsider who's perhaps going to be taking the reins. There are, of course, concerns about uncertainty in the leadership, which clearly remain that right now, and the CFO exit and the leadership attrition thereof has also added to further uncertainty. The stock, remember, has already fallen 30% in just the last 6 months, and it's taken another knock of about nearly 4% in today's trade as well. Let me in fact take it across to Gaurav and find out what the brokerages have been saying about IndusInd Bank and Sumant Katpalia getting just a 1-year extension.
First, let's understand what the news is with IndusInd Bank, and now RBI has reappointed Mr. Sumant Katpalia as MD and CEO for the next 1 year. Why this is a negative read-through is that the board has actually recommended that he should get reappointed for the next 3 years, and this is actually a second instance where RBI RBI's reappointment policies did not allow him to get reappointed for the 3 years, and that is the reason why when we look at the overall read-through, it is getting negative for IndusInd Bank. It also leads to speculation that after 1 year we may see churn in the position of CEO, and at the same time it also shows that RBI is a little bit reservative when we talk about IndusInd Bank's leadership. Now with this, brokerages are also being a little bearish. IIFL cut their target price to around 910 rupees. Why? Because they are now actually penciling in price to book value, a forward price to book value of 0.9 times, which is actually lower than the one time that banks usually get for the business. Other than that, when we look at other brokerages also, we saw the rate cuts and as well as the target price cut across the board. So we've got Jeffries who actually cut their target price to 1080 rupees, because what they are saying is that recently bank has already been under pressure because of the MFI segment, and with this new move it also shows uncertainty with the leadership. When we talk about Elara, we are seeing some rate cuts from there as well. Other than that, Motilal Oswal also maintained their target price to around 1100 rupees. And lastly, when we look at Nuvama, they have maintained their hold rating and a target price of 1115 rupees. But what they are saying is that now in the near term, the earnings visibility will also get lower if there is churn in the upper management. So definitely a negative read through coming up from brokerages as well. And as a result, we are seeing some pressure in IndusInd Bank's share price. So definitely watching out on this counter on the back of the news flow that we have received recently from RBI.
All right, thank you so much, Gaurav, for getting us all those details. So yes, of course, IndusInd Bank is definitely under pressure and no significant recovery from the day's lowest point as well. But Deepak, I wanted to have your take on the metal pack, because like you were just highlighting and mentioning as well, that the steel and aluminium tariffs are going to be effective 12th of March. But back home, Deepak, it's the metal index that has outperformed the returns in Nifty on a calendar year basis. We have already seen a 15 to 20% jump. What's your sense that once these tariffs are applicable, how is that expected to impact the whole demand and supply equation and also on the pricing front? And if anyone has already participated in the sort of a metal run-up, is this a good time to maybe book out some profits and be safe?
So I think from a trading perspective, I don't know the answer to that right now. I think the charts will probably be a better indicator of this. But typically, the cycles have become a little bit shorter now. So one of the threats right now is if the US puts all these tariffs on steel and aluminum that is imported from outside of the US, then where does that steel and aluminum go? So India is one of the places which does continue to import a lot of this, although we are a big manufacturer. We do import, auto grade steel. We import forms of steel which is perhaps not manufactured. And many times when the steel is cheaper to be imported, we do import significant quantities. And we're seeing early signs of that already. And I think we should be careful that the steel companies that are here, specifically those that manufacture most of their goods here, I think they will have a negative impact once once these tariffs come into place. However, you can't say how long these tariffs will last, because nowadays, depending on which side of the bed the US president rises from, the tariffs may come, go, get cancelled, get postponed. So you can't really say, based on the fundamentals, because things are so volatile over there in terms of policy action. But I would generally say be wary, because this is a time when some of that you can materially change profitability of the sector, may change EV to EBITDA levels because of stock prices coming down as well, and change, force the government to start putting anti-dumping duties on some of these other countries as well, which will try to dump in India as much as they can. So I'd say be very careful here. But if you're a trading person, then forget the fundamentals, trade the charts. The prices usually tell you more than you have to know.
Indeed. Okay, Deepak, great to have you on the show. We'll let you go on that note. Thanks as always.
Thanks so much, Aisha.
Okay, 0.5% lower still. We've not really seen any meaningful recovery come by. In fact, if nothing, it's worsened a little bit from there. The breadth as well is looking quite shaky. We're down about almost 120 points. So pretty much undone all of today's, gains from within the broader markets. It's the Titagarh, which is down 6.5%. Dixon is down 5.5%. Birla Soft is down 5.5%. Kalyan Jewellers taking a knock of 4.5%. And CG Power, which is down about 5%. 4% or so as well, 4.5% to be precise. And the breadth has completely changed hands. It's a good 194, which is the count to the declines right now, to just about 27 to the advances within the F&O universe. But Kunal, any closing strategies?
So I'll still look at, on the buy side, Avenue Supermarts is something which is looking attractive. The stock holding on to that 3,600 mark, even on a day like today. So looks interesting on a relative strength basis.
Right, Naresh, what about your closing ideas?
So that would be a sell on Dixon Technologies, which has given a fresh breakdown today, expecting it to correct towards 12,500 to 12,000. Give a stop loss at 13,500.
Okay, a buy on DMart, sell on Dixon. That's the call coming in from both Kunal as well as Naresh. We're going to take a very quick break, come right back. We'll continue tracking markets the last half an hour of this Monday on the other side.